Um, James, what was that, Ash? What does that mean? Oh, I wasn't planning on using video. You can't go on it. Okay. We're underway. Not quite sure why we're underway. What are we doing? I just saw. Rightio, everyone, and welcome to the first Trader Talk Radio from live on YouTube. It's great to have your company, and thanks for joining us today. With me, we're coming to you live from the Bali Trading Retreat today. With me is our normal co-hosts. Ash is in the room, Ains is in the room, Geoff's in the room. I think Julian will be joining us reasonably quickly. It's our first show on YouTube. We are going to keep it reasonably short. We are in the Bali Trading Retreat, and there's a lot to go on in Bali this evening from us. Going to start off today, I think, with Ash. Ash, what are you looking at today?
Yeah, so looking at the FTSE 100, I'm looking at the FTSE 100 and I'm looking down here. There is a potential that this the price won't come to my point, and I'll show you why. There's a much longer term level here, which is just holding the price up. But I'm not too keen to jump in. I am bullish on the FTSE. Yeah, I am bullish on the FTSE, obviously, and I'm bullish for reasons of seasonality. Is good for the FTSE going into November. I also don't see why there should be too much of a sell-off in the FTSE. We've got strong reasons to suggest that the American market will continue to pop to the upside. China and America have apparently signed phase one, but they've done a basic agreement on phase one of the trade deal. We've got Brexit uncertainty, which is just holding things up, and we've got economic data this week which may hold things up. So I'm hoping that we'll hold up and still drift down. Let me show you this wider picture here, and it comes from the weekly chart. The wider picture from the weekly chart is what's holding this level up. Now that level's strong. It's a big level because it's on a weekly chart. I call it an intermediate level, and that is why we're struggling to break down. And it might be that it doesn't break down and get beyond this point and give me the price that I want. But I'm looking for a test of this area. It might even be a little bit lower, but somewhere in this point here is going to be my buy zone. So I'm not keen up here, and it's just a case of waiting and hoping that price does pop down. If it doesn't pop down and we break out here, then I'm going to be looking for the next retracement to get on board. But for right now, I'm just looking to see if we can get down just a little bit further. As I say, Brexit uncertainty.
It's just on that note, just to confirm, the EU have agreed a 3-month extension on Brexit with flexible terms. It's been out now.
Yes, so we've got the EU agreeing 3 months of a flex extension, which means that the UK can still leave in specific dates in December and November as well. So it's going to be until the 31st of January, and then we can leave if there's an agreed deal before that. but that just takes the pressure off a bit. I think that was pretty expected. I mean, we did have a small sell-off this morning, whether it was to do with that or something else. There was some pretty terrible earnings from HSBC today as well, which are a UK company and one of the big players in the FTSE 100. 18% negative from pre-tax profits from them, which may have allowed the FTSE to drift to the downside. And I was hoping that would create the opportunity, but it just hasn't. So I've just got to wait and see. I've just got to, wait to see whether price can come down. If this area starts to form a strong enough pattern, suggesting it's going to hold up, then we might need to go in light with the idea that we can add if it pops down a little bit more. So what I'd need to see on that front is probably, I mean, it's starting to look this way already, but it's probably going to be a time thing rather than a pattern thing. This has broken through here. So, coming down a little bit further is going to suggest that at least today, it's unlikely to break down. And because of the heavy news and data for the rest of the week, that also suggests that any pop to the downside could be quite vicious. Now, I don't mind that personally. I don't mind if the move to the downside is fast and hard, as long as I get my price. It won't be reliant then on a chart pattern. We're just going to have to look for price. But I'm looking for a price which is around about 40 pips below where we are, and I don't need a lot of convincing that I might need to take it here, but I need a little bit. So right now I'm sitting on my hands.
Righto, Ash, thanks for that. Nice to have your company as always. Good to see the team back in the Trader Talk Radio, the free show today. First time on YouTube. It's going to be a reasonably brief show. We're going to come over to Geoff. Geoff, how are you going?
G'day, Paul and all. Yeah, waiting. Playing the waiting game. I think we're in a good position to take advantage of something if it does set up. I've got euro dollar and Aussie dollar strongly on my watch list. Euro dollar is going to tell me whether it's going to go short or long in the not too distant future, and I hope to get on board with that. Currently, we are at a resistance level, but that looks a little bit tenuous to me. So I can try.
Sure.
That's what I said before. It's not there.
Shall we go check the things while we sort it out?
Let's just pull that chart up. Okay. One of the things I'm looking at, I'm up on a weekly chart at the moment on the US dollar. US JPY. And one of the things, it's hit a level of resistance, which I think is going to move it up. Thanks, Jane. Move it from this area of fairly strong resistance. And this is up on a weekly chart. And what I'm looking for is a continuation of the move up to a very tried and tested level of resistance up here again. The seasonal chart for me on this is for it to be bullish on the yen, and we'll see how that goes. I'm already in and looking for it to move right up to around the 112 level. The other one I'm looking at is the Aussie dollar long as well with Geoff, but at the moment it's just a bit of a waiting game, and we've certainly got on CPI tomorrow afternoon. So they're the ones that I'm patiently looking at as well. So looking for a move to the upside. I'll just drop that down. Sorry, looking for, I've got a bounce off here. As Geoff said, we've got a bounce off support here at the moment, and we're looking for a move back up here to this level up here, which is around the 68.84. So try 3 times here and break through. So they're the two that I'm one I'm in, and the other one I'm patiently waiting for to set up.
I'll put it that way. I'm not convinced that we're at that point, because what I really see apart from that, or what I see apart from that, is a level across here that's a horizontal level. If I go a little bit wider on the chart, you can see where that is. That's this level here. We're playing with that level as well as the daily pivot. So my contention is that if this daily candle closes where it is now, then I'm happy to probably place an order underneath it tomorrow morning. If, however, it wants to come back and have another look at the weekly pivot, or a look at the weekly pivot, that gives me a whole new dynamic, because what that then becomes is a false break of the support trend line. So I'm kind of in no man's land right now until it tells me what it wants to do. I can definitely see that we've had a break and retest of the trend line. That would suggest that there is a potential for this to go short, and I can't argue with that. But I can also see the potential for this to come back to the weekly pivot, then come back and retest the trend line, and that's going to give me a bullish outlook. So I'm not ready to trade it at the moment. I'm just waiting to see exactly what that does, and hopefully it'll indicate to me that there is something to trade, be it long or short. Aussie dollar, on the other hand, is very, very clear. I've got a box range here that I'm going to change to a different colour because it's very, very difficult to see. Let's call it a nice little shade of snow, shall we? There we go. So that should be a lot easier for you to see. And the structure here that I've got is a rectangle, so a box range. And we're going fairly regularly off the bottom to the top, to the bottom to the top. My expectation is that if we don't break through this high, we're going to go back to the bottom, or at least to the monthly pivot, where we can take a little bit of profit, then come down to the bottom. If that's the case, I'm looking to trade that as a lower high. So by definition, if we can't take out the high, we should produce a lower high. If we do produce a lower high here, that's exactly the position that I will adopt. So I'll be looking for an entry around about this WR1 level. If it does shape up on a daily chart tomorrow, I'd be surprised, because we've got to get up there to start with. So I'm not looking for it on the daily chart. But if we drill down a little bit, we can see an opportunity here, I believe. What I'm looking for is a break of this resistance up to the weekly pivot, maybe up to a DR2 even. I'm happy with either. And then find its way back underneath all of this noise, the range that we see here. Take out the lows, then come back and retest the daily pivot and confluence area with that resistance trade line. If that's the case, that's my signal to go short. That's probably where I'm at. That's case A. If we really want to get into case B, we're looking for a break of the resistance, and maybe even it just goes from there, because that's the setup. If you're thinking long, there is a range here. If it breaks and takes out those highs, maybe closes on its high, something like that, that's going to be a fairly bullish signal. So a lot to consider here, but I'm not ready to jump into the market just yet.
Cheers, Geoff. Thanks for that. Julian, you ready?
Hi folks, we're good to go. Just myself on the video, and I should be able to. Can I start my video? People see that?
Oh, Julian, we can see you fine.
Okay. Is it catching up? That is not.
Welcome to the online world. It's good to have your company.
I'll tell you what I'll do. I'll just talk you guys through things at the moment. Particular reason to see a picture of me. Yeah, look, guys, at the moment, I think it's a really important week. We've got the Fed, and we've got, as Ash mentioned earlier, the Canadian interest rate decision this week. Dollar CAD is trading pretty strongly. In front of that interest rate decision, market is clearly positioning itself long of Canadian dollars, short of US. As we go into that interest rate decision, I think we'll see what the outcomes will be as that unfolds. I think the major thing for me is going to be the Fed. That's a Wednesday announcement. Ash?
Yeah, Thursday.
Yeah, Thursday
yeah.
for Singapore time, Wednesday announcement for US time. And I think that the key thing about that is to obviously just see how the market's positioned in front of it. So the moment the expectations are for the Fed to cut rates for one last time and then possibly talk neutral language after that point, any change in that neutral language will be seen as being incredibly positive in terms of a lower interest rate scenario. Given it's the seasonally bullish time for stocks, if we saw that change in attitude from the Fed, any deviation from what the expectations are to be slightly more bullish about short-term interest rates than being a little bit lower, then I think the stock market will respond really positively. And we're already seeing it trading on the high signal pattern that we see this time of year. It began the middle of last week, pretty much spot on the timing schedule. We're looking at the end of this month for the sweet spot of that, and obviously going into the first couple of days in November as well too. So it's really pretty much this week, guys, and we'll see how that unfolds as the Fed makes its rate decision. So for me, the two key events I think are going to be happening on Wednesday in New York time, so that's Singapore time Thursday, and also the couple of days leading up to it, really to see how people are positioning. It's very clear at the moment that we've had a retracement on the Euro USD. That's come back quite a fair distance from the highs it set the beginning of last week. And I think that's given us the opportunity to look to try for bullish setups in that. Is this the end of the retracement? That's what we're going to be working on, I think, for this week. And that's also true in some of the condols as well too, with the Aussie and possibly the Kiwi as well, exhibiting the same type of pattern. So somewhere in there, I think, is a US dollar sell trade across the three different currencies. It's going to again be the focus for the first couple of days of this week, I think. And that's really where my attention has been recently. And if you look at what's going on the bond market and what's going on in the gold market, there's mixed signals. Gold has been trying to go down. I think it's pretty clear. My views have been relatively negative on gold. And to the extent that it hasn't gone down, maybe a really bullish signal for the future. We have to wait and see. We've got another 3 or 4 weeks of the seasonal pattern to go before that starts to look bullish again. So our thought process will be we're still looking for sales because that's in line with our corrective strategy, given that the commitment of traders is also significantly short as well too. So really for me, gold, I'm looking for sort of pops up. We'll probably jump on fairly quickly. At the moment, it's not giving us that. It put a nice reversal in on Friday, but we've got to see follow-through pattern from that. Probably break back, start to trade really for sure below 14.96, and I'll start to feel comfortable that we maybe have a slightly more deeper correction. But make no mistake about it, this correction's $60 in the course of 2 or 3 days. So just bear in mind that there's plenty of time, and there's also plenty of price action left in that market before we start again sometime in December. I can't see a huge amount to do in oil. I'm looking for potential reversals there to the downside again. This is the, seasonal time for oil, and we're looking to take advantage of that. But right now it's been trading up, and I haven't got a setup to go short. So I'm just waiting with that one, with the expectation that that breakout we may well fail and the market may well keep going or reverse and go back down again, in line with the trend it has been for the last month or so, which is also in line with where the seasonal trend bounce out the triangle. That's a false breakout and then reverses down. Because if that is the case, we're going to go about $7 or $8 down from where we are now, and that we'll get bucks on WTI and about 56 on the Brent, and that probably will also signal the retest of the major support, which will be really interesting, because that could see us waterfall down to the mid 40s easily by the end of November, early December, if that takes place. So we're on watch for that moving goal in oil, about a $15 move potentially. So that's really going to be quite interesting, and see how that unfolds. Apart from that, I'm pretty.
Can I ask a quick question? You just mentioned that gold and bonds are giving. Could you just elaborate on what the bonds are showing?
Yeah. So the way the bond market's trading at the moment is trading fairly poorly. I'm not that particularly been breaking down over the last 2 to 3 weeks. I guess to some extent you'd expect that with the stock market doing really well. So the flight to quality is over. A sign that people are getting nervous about the Fed rate decision. If they're moving to neutral, the bond market, is already trading at yields that are below the negative carry at the moment. They'll be really sensitive to any type of neutrality statement from the Fed. They have high expectations the Fed will continue. By the look of things, the bond market is betting on the Fed will continue with its rate cutting, and it will not be a mid-cycle adjustment that ends here.
Right.
And I think that's the key question. So the Fed language on Wednesday/Thursday morning our time is going to be really critical for the next 2 to 3 weeks of trading in quite a few asset markets, because that could easily impact the euro FX and also dollar yen as well too.
Yeah, and that's a really interesting point, isn't it? We're all waiting for this rate decision. We all kind of know it's going to be a rate cut, but the key isn't the rate decision; it's what they say. That's what we're really waiting for, aren't we?
Yeah. So I think the rate decision is pretty much locked in. They're not going to walk back from that. That would be extraordinary.
Yeah.
It's their language about what they're going to do next that's incredibly important.
Yeah.
So the nuances in that Fed statement are going to be very important, and probably Powell's press statement, because normally the market tends to move quite significantly on the back of the 1 or 2 things he says differently.
Yes.
In the press conference afterwards, when he tries to put his overlay on what he sees the market. We've seen time and time again, he will make a statement that is not in line with what their printed statement says.
Yeah.
Their press release says. He'll then tell you what he really thinks in the press conference.
Yeah.
Which will then lead to some really interesting market reactions.
Yeah.
Because people will definitely overreact when the chairman of the Fed says something contrary to what's in the statement.
Do you know, I thought it's fascinating. We've been talking for the last few days about the fact that the Fed are quantitative easing, but they're not, and it's because he said they're not. That was it, wasn't it? That's the only reason they're not, because he says they're not.
Correct.
Which is correct. Which is the fact that the market hasn't reacted just because he says they're not.
Yeah, look,
astonishing.
Look, last time I looked, $700 billion of liquidity injection into the money markets is actually quantitative easing. Last time I looked, but apparently it isn't.
Yeah.
Because Powell said it isn't. I'm not quite sure how you squeeze that under the radar.
Yeah.
That's fairly close to $1 trillion. That's quite a lot of money in my book, but clearly the market has a factually different view on that. But if you look, there's a lot of people that view the stock market these days, and also the way that the US dollar trades, the foreign exchange trades, as a liquidity question. And there's been no question the Fed has moved on liquidity in the last 2 weeks. And that's the fundamental reason why the euro has recovered, and the Aussies recovered, and the Kiwis recovered, and the Canadian dollars recovered.
Yeah.
They're all recovering. There's been a US dollar sell-off because the Fed has eased liquidity and provided lots of dollars into the system and increased the supply. And whether it's sort of they've done it above or below the table, no matter how you want to look at that amount of money as being below the table, it does make you wonder what an above the table amount would be then, doesn't it?
This is the thing. I saw
Big table.
A very big table.
The thing that seems to be Jerome Powell is kind of dovish action, hawkish statement.
You know, he can kind of make it sound like he's doing something that he's not doing.
Yeah, I guess
which is going to be interesting. You know, when we get the press release, how are we going to read it? I mean, it's if it's going to move the market, we're just basically going to wait for the market to tell us. Or the sounds of.
Well, does he then say that by being hawkish, does he not then say that I'm actually doing the independence thing and thumbs his nose up at Trump? But then on the other side of under the table, then does exactly what Trump wants to do.
Yeah.
What about the other? And I won't say what if they do on Thursday?
Too much. I mean, I don't want to say it's not going to happen, but it's not going to happen.
We're not having 2 weeks.
So they actually cut, but he says they haven't actually cut. This isn't actually a rate cut.
I'm pretty sure, Geoff, that if they decide to not cut on Wednesday, when the market's pricing in, I think, a 95% chance of them cutting, that you're going to see some action on Thursday. We're going to have a very busy trading day.
Look, I've got one other question for you, and it's really for you, I think, and it's a 30-second answer.
Yeah.
Boris said that he didn't want to see him.
Yeah.
Sign it.
Yeah.
You have agreed to the thing that Boris didn't want.
Yeah.
But it doesn't count until they sign contracts. So you've got to put it in writing, and Boris has got to sign it. Any chance that we'll start off this tomorrow and we're Brexit on Thursday?
Is Paul still trying to collect on his money?
I can't believe don't do that. I think I've won that bet. We are here. They are still in. They're going to be any chance that Boris and Dominic have got something lined up here, but at the last minute they just reneged.
I would have thought it'd be unlikely. I mean, to be fair, anything's on the table at this stage. I don't think at any one point, none of this has been predictable. At any one point, just when you think that it's going your way and you get it, they flip it. So
about 8 months ago.
Well, that was the only thing that was predictable. Yeah, maybe so. But so I suppose to answer that question, I would say no.
Look, because really, if the EU have extended and given the 3 months legislation, or whatever they call it, really that puts Europe back in the game, really, doesn't it? We've got 3 months to work through now. The election news, it'll be what it is. I think there'll be a massive response to that in the market. That'll be well priced in before the vote, I'd have thought.
Well, the problem is that we are just in complete gridlock. You know, he's not going to get the election the way he's planning it right now, because the S&P and Lib Dems have got a specific amendment. Labour aren't going to back that particular amendment, so that kind of like puts the flames under that piece of paper. The Conservatives aren't going to go with Labour's amendment. So, in a way, we can almost forget about Brexit and just focus on whether we're going to get an election right now, because I don't even see that getting through. It's just complete gridlock.
It's be really interesting to see how many of the people in Parliament this term are re-elected at the next election.
Yeah.
Because that has been just a continual disgrace, and surely the electorate's going to say that's enough.
Yeah.
Rightio, guys, it's our first. That's our first TTR, the original show. We've been doing it free to the world for 7 years now. Put it on YouTube. Today it's our first show on YouTube. Anything from you guys before? Guys and girls, Zoe Ainsley. Anything from the team before we wind her up?
Yeah, I'm not committed to Euro or Aussie in any way in terms of short-term trading. I am a bull Aussie longer term, but I can definitely see some downside here, and I can do exactly the same thing on the euro versus the dollar. So despite the conversation that we've just had, and I can't refute any part of it, because obviously if they do cut interest rates, we're going to see a lower dollar. If we're quantitative easing, that we're not quantitative easing, we're going to see a lower dollar, which, you know, absolutely puts these in the opposite direction.
Hold on a second. I don't think that's at all true. The rate cut is priced in.
Yes.
So a rate cut is not going to see a lower dollar. A statement that was bearish would see a lower dollar. A statement that was bullish would not see a lower dollar, and we have no idea on the statement, right? It's very much up in the air. So the rate cut's coming, and that's priced in by the market. But if we've got the rate cut and a statement saying, hey, that's the end of it for now, the US dollar will bounce. So I don't think that there's anything in the rate and this rate decision which gives us clear direction. Is that the read from you guys?
Yep, I'll go along with that too.
So I think you can still trade the US dollar in either way. I think Julian's got an opinion. What was your opinion on US dollar? Your US dollar?
Yeah, look, I remain a US dollar negative for the medium term because of the liquidity injection that they've started. This is something that they've just started. Right, bear in mind there's 700 billion to go over the next 12 months, and in all likelihood, if that doesn't work, if they can't free up the dollar system, they'll do another 700 on top of that.
An application form for this money.
So what's
An application form to get this money. I'm prepared to do some paperwork for this. I wouldn't mind my share of the 700 billion.
So for those of you online that didn't quite hear that, Paul is quite keen on having some of that spare money around that's floating around. I'm actually all in favour, by the way, Paul. What you've just suggested is the correct way of actually distributing quantitative easing money rather than giving it to the banks. Give it directly to the people. I'm a huge fan of that. It may be seen as being a slightly neoliberal view, but I think it's the best way to make the transmission mechanism work. Why would you give it to bankers rather than giving it to the general public?
Yeah.
I think there'll be a huge amount of support for that just about everywhere.
Certainly from the general public and not the banks.
And if you did it by height, you'd obviously end up getting quite a lot of it.
There you go. That's my preferred method, by height. Short. You're short euro and short Aussie, right?
I'm waiting for the prices to get long, but I'm happy to trade it to that price.
You're waiting
Yeah,
on
look, I think that actually pretty much supports my view as well, what Geoff is saying, right? So, look, if the game plan here is, let's go with the game plan. Right?
Yep.
The game plan is the liquidity cycle has changed. Okay, at this point in time, our thesis is that the US dollar may have topped out in the short to medium term. Right? So subsequent to that, what decisions are we going to take? Right? There's no reason not to be. You could trade the Aussie or the Euro and also the Kiwi from a US dollar strength. But bear in mind, if you're going to do that, that's a super short-term trade compared to the more medium-term trade, depending on your time frame, which would be a Aussie, Kiwi, or Euro dollar long and a US dollar short. So then it's really about picking your poison and finding the best one that's performing at that moment. And it may be, because a lot of people on the radar, maybe the dollar catch the one. If you look at that chart, that, by the way, hasn't even bothered to increase the last 4 days. That's just back on the lows. You want to this one, then you've always got a catch sell right now.
Okay, anything for you before we wind it up?
We're all happy with a bullish outlook on Aussie and Euro versus the dollar. I'm just happy to trade it the other way, very short term, until we get a signal to go that way.
Look, I'm not sure I love it when we have consensus. I love it a lot more when we don't quite have consensus. It's a lot more fun when we don't quite have consensus. That is the original show, live and exclusive to the entire world on YouTube for the first time. Any moment now, we will end this session as soon as someone shows us how to end the session. Thanks everyone who's joined us today to be part of it, and particularly those who have presented it. Can someone now end this session for us? Thanks. Just as well we're traders.